Hi everyone, and welcome to another video. So once again we're going to be discussing Boohoo. Now I've done a lot of videos on Boohoo, I think because it's such an interesting story and there have been more developments again this week. Obviously it's been a big focus on my channel, but to be honest I find this kind of narrative, this kind of string of events that have come around this year for Boohoo very interesting to follow, very interesting to hypothesize on and to discuss the possible ramifications on an investment in Boohoo or whether or not you should take one. So yeah, if we jump into it, obviously I did a video last week about how Boohoo was losing its auditor, PwC, who have resigned. I think the rumours were, or the insider take, according to an FT story, was because of the reputational damage that could be caused by continuing to work with Boohoo. Now that hasn't been confirmed by the company, by PwC, although on Monday of this week, Boohoo confirmed that they were losing PwC as an auditor and they're starting the auction process now, the bidding process. So, I mean, that was met pretty negatively by the markets. You can see here, you got the Monday prices. Between the Friday and the Monday, the stock was down 20%. A severe fall. Now, since then, this week, since about Tuesday, it started to climb back up again. I think partly at the beginning because this was an overreaction, and then later in the week we had some positive news. As I said in my other video, I do think there was going to be a fall in Boohoo stock, but not quite this severe. Because, an audit is important, especially over this year where there's been a lot of worry about fraud and our auditors doing their jobs right, etc. So it's important that PwC was stepping down, but possibly not that important. I think that more than anything shows that Boohoo investors are very really volatile with this kind of news after the year that the company's had. So that's something to watch out for in the future. If we look here, this is an FT story from earlier today on the Saturday, and just talks about the story of Boohoo, that it's been a really divisive stock since it was listed. I think here it brings up, you've got the Boohoo investors hoping for a period of calm, effectively. PwC resigned, and the National Crime Agency is investigating one of its suppliers on suspicions of money laundering and VAT fraud. I'm not sure how critical this is for Boohoo. Again, we've gone through the whole thing of newspapers blaming Boohoo for things in its supply chain. Obviously, it's not a good look. And I think they do have some culpability for that. But I think, this kind of throttling it to death might be unnecessary. I don't think this is going to come to much on the Boohoo end, but I could be wrong. So there are also positive news from analysts, the team at Board, I think that's how you say it, who were very negative on Wirecard, set price was 0. See this as an opportunity to buy. So that's good. I mean, you've got people who were very negative about Wirecard, a very famous fraud story from earlier in the year, but it's been going on years. Obviously they're positive. They think this is time to buy. So that's a good signal. I think interesting though here, this story talks about PwC's resignation has intensified investor jitters. And apparently the big name competitors, the big four accountants, all apart from EY, are really hesitant to put in a bid. EY apparently have said they're undecided, but the others have said they're not going to. You can see that here. So also shun Boohoo contract. Deloitte, KPMG, BDO, and Grant Thornton have all decided not to bid. EY is said to be still considering. That's not good. Now, what I said in my other video, and I still believe, is that what Boohoo needs here is a really a big name, a well-known, trusted, respected firm to come in and say, this is going well, we give you a snap of approval, etc., etc. There's no fraud going on. This weird timing around PwC stepping down, as I said in my other video, combined with the controversies this year, they need a good firm to step in. And the last thing they need is a period without an auditor. And that has happened before recently in situations like this. Again, this is a different FT article. Talks about it here. Sports Direct, aka Fraser's Group, struggled to find a replacement auditor when Grant Thornton resigned. Obviously, this was in response to a probe, so a little bit different. But yeah, I mean, that's interesting. I mean, for me, I think it's quite unlikely that EY will bid on this one. I could be wrong. Obviously, I don't have any information on that. That's just me hypothesizing. Because of the Wirecard situation they were involved in earlier in the year. And because really there's just a lot of, pressure to act properly. If they see something dodgy in a company, to report it, to resign if there is some concern there. That's why I think it's worrying that PwC has resigned and no one wants really to step in, because that could be bad. Boohoo needs a big name behind it, and that's important, I think, personally. Now, other investors might disagree. I know a lot of people saw this as a buying opportunity, this big fall, because of this. And I do think it was a slight overreaction, but it could be getting a lot worse if, as the FT article says here, if it leaves a void. If we end up with a less reputable replacement or without any replacement for a while, that would be bad. Anyway, moving on. The positive news this week was directors buying in. 3 different directors, or 3 people linked to directors, buying in at the price as it fall at the start of the week, around the start of the week. So they're seeing this as an opportunity. And that's, again, interesting. A spate of direct purchases disclosed the day after Boohoo's audit revelation have helped steady the share price. Mahmood Kamani bought 729,000, 12.5%. Deputy Chairman, 25,000. Catherine Cato, wife of Chief Financial Officer, 15,000. So obviously, this is good. Kamali increasing his stake slightly. Obviously, it's not a huge amount of money compared to what he invested in before. But what this means is that, this steadied the stock. And you can see from the chart here that bolstered it back up again. Because investors see insider purchases as really positive things. And if you look here, you can see, so you've got 315,000 shares in the past week, effectively, I think. Most of those. As you can see here, from those 3 purchases I just mentioned. And before that, 7 million shares 3 to 6 months ago. And that was 5 million from Kamani, 2 million from Carol Kane. Now, this is interesting to me. So this was 16th July. So if we go to 16th July here, you can see 16th July, they start purchasing. Price comes back up. And then obviously we get more news, brings it down, etc. That was around 27th, there's around results. So from around when they bought those shares, they're up 85%. I believe, which is obviously an amazing return in a few months. But I think that's why Kamani and others have purchased again. I think Kamani here is trying to push the stock price back up. That obviously is conjecture, but knowing what happened to the stock last time, obviously this wasn't just because of him, but I think that had a large impact, that big buy-in. This buy-in's a lot smaller. And that hasn't stopped investors reacting positively to it immediately, but that is a small concern for me. I mean, why buy 5 million shares last time and only 300,000 this time? Obviously, I believe the price is, when he bought, is higher than when he bought before, but not by a massive amount. They're fairly confident it's going to go up again. So that's what I'd say. Was this an attempt to push up the stock price, to reverse that negative trend? Maybe because, again, pure conjecture, he's got some debt linked to his shares that can't go below a certain price, because he wants to show it as a successful company. So him buying even that small amount of shares has kicked sentiment back up. Now, I mean, it's often said that management can sell shares for lots of reasons, but only buy shares for one reason, and that's because they're positive about the future of the company. While that's true, I think there's also caveats to that. I mean, Kamani owns, at this point, 12.5%. He's the second biggest shareholder. He is a dominant shareholder. I mean, adding 300,000 shares is not very much. It's not going to do much to his percentage stake in the company. It brings his shares, I mean, he's got 157 million shares. Those 300,000 don't do very much. What that says to me is that this was an attempt to kick the price back up rather than for him to buy in low. Maybe it was buying in low for Brian Small, for Neil Cato. Obviously, they're a lot smaller in size than Kamani's purchase. But that's what I look from that. The purchase here is really interesting because it's such a... obviously, it's still quite a lot of money at 730,000, but nothing compared to what he spent before in the 10 million range. And nothing compared to his overall wealth. Obviously, he's a billionaire, but a lot of that will be tied up, in Boohoo, and I expect in other ventures. I don't know 100%. Obviously, it's difficult to know what his financial situation is like, but he's a very wealthy man. I mean, he probably could have bought more than 315,000 shares if he wanted to. To me, this is like a kick to the stock price. I want it to go up from here. Let's buy a few more. It's still cheap. I think it's going to appreciate, but to be honest, the main impetus is let's buy for it to rally, and I think it's going to work. But that is different to buying because it's a solid company. I mean, one of the comments I saw in another video about Boohoo recently was that another person who bought shares just before a company failed was the one of the senior management, I think it was maybe the founder at Wirecard, bought shares right before the company collapsed. So, I mean, you can't necessarily trust insider information. I mean, to go on about that, insider buying doesn't have to necessarily mean that stocks are going to go up. Firstly, I'd say company insiders are not investors. They are businessmen. They are obviously highly intelligent, obviously good at their jobs generally. That doesn't make them good investors. It doesn't mean that the company will outperform the market. And it doesn't mean that, they really necessarily know the future for the company. Obviously, it's good when they're from, senior positions, certain positions, CFO is great, etc. But it doesn't necessarily guarantee that stock price is going to go up. Obviously, not everything does, but this is why I wouldn't buy just based on insider buying. Now, if you look at this is an article from Seeking Alpha, from the Seeking Alpha contributor, that goes through a lot of companies that have insider buying in the past, really historic examples. So 2016, Cell C, and insider buying underperformed the market and actually was negative for most of the time until recently. And this is a drug company. The trials that encouraged I believe it's the CEO, to buy in, to buy warrants, then still haven't finished as the date this article was written. Again, 2012, T. Boone Pickens III buying a lot of shares. And you can see there the performance. Not good. And then there are other examples here as well. So yeah, what I'm trying to get from this is insider buying is a good signal. You can't deny that. I mean, there are other studies that show that it does improve the market return. What I'm saying is it doesn't guarantee that you will achieve over market. And there can be other reasons for an insider purchase. This could be an attempt to reverse the sentiment in the stock. Now, obviously, that is conjecture. I don't know. But I just think the timing, how well it went before, a much smaller size, especially compared to someone like Kamani's total net worth, but also compared to the other salaries of the others that bought in. Obviously, they're earning a lot more than that. It's like a very small percentage of their salary. If they really thought this was the bottom, if they really wanted to cash in on this, as Kamani and Carol Kane did a few months ago, I think you'd be buying in big. And you're not seeing that comparatively. Obviously, it's a lot of money for most people. I just want to get that across. I'm not saying that amount of money is small, around the 700,000, but comparatively to his total net worth, it is small. Obviously, there could be liquidity issues around there. It could be that he just didn't have the cash on hand. That's possible. But I just think, based on that, I imagine that this may have been an attempt to turn the stock price around, which isn't necessarily a problem. Obviously, there's no way to prove that. I'm not saying it's manipulation in any way, just that that's obviously in the best interest of his wealth and the company. So yeah, I think when you see things like insider buying, it's obviously a positive sign, but it's not necessarily a reason to buy. It wouldn't be for me. You just have to keep an eye on that. The last thing that also happened this week was that Boohoo's largest investor, Jupiter Asset Management, replied to an MP's letter saying that it's now more involved in the company. And this is really good. It says a lot about how Boohoo have been really positive in reaction to change, etc. So that's good. I think, any more engagement from the side of the asset managers is good. It's positive. Should help these companies. They're obviously established. They're trusted, respected. It's a good thing. It's not a negative. So yeah, I think that's probably helped boost the share price up on Friday as well. And I think that'll help it keep going up for the near future anyway. Certainly up to similar levels. But yeah, we'll see. Thank you very much for watching this rather long video on Boohoo again. But once again, this is not financial advice. I'm not a financial advisor, so please do your own research, form your own opinions, and seek out advice when you need it. And yeah, thank you very much. Please watch my other videos, subscribe if you enjoyed, and yeah, thank you.